Welcome back to OptionFlow. Here is Lou, OptionFlow founder. Today we are exploring neutral options strategies. So, powerful techniques to generate consistent returns in sideways or range-bound markets. So whether the market is moving sideways or experiencing low volatility, these strategies can help you capitalize on price stability. So let's dive in. First of all, disclaimer, as usual, I'm not here to suggesting you what to do with your money, how to invest your money. It's your business, it's your choice, your responsibility, so make your own studies, your own research. This is my personal vlog. I only share my ideas, my experience, my thoughts, and I share what I do with my money. So I don't tell anyone to do anything. Okay? So in the previous video, I share strategy for bullish market and I made another video for bearish market. So you can watch in my channel. Interesting videos. What about if the underlying is a sideways? What to do in this case? So neutral option strategies are ideal for traders, for investors, anticipating minimal price movement in the underlying asset. So there are lots of strategies, okay? And for example, there are straddle, strangle. For example, the straddle. A straddle involves purchasing both a call option and a put option with the same strike price and expiration date. This strategy profits from significant price movements in either direction, okay? Either up or down, it doesn't matter. The underlying needs to make big movements, okay? So for example, this is the underlying EWZ. I share Brazil ETF. As you can see, the price is the same, okay? A little bit up, down, but it's sideways. For example, I'm not telling you to straddle on EWZ, just an example. A straddle, it means the price is 32.3, okay? So the closest strike, so 32.50, for example, okay? And straddle, it means buy a call, for example, 32.50 with an expiration date, okay? A call to earn from if the movements will be bullish, and buy a put option, okay, if the movement will be bearish, okay? So this is the straddle. So the most important thing is this strategy earns if the underlyings make big movements, okay? So EWZ is not the right one, as you can see, okay? This could be a good strategy, for example, before earnings on stocks. There are always or often make gaps, for example. Let's see, for example, Google. So it's good for, okay, as you can see, for 6 months. Okay, as you can see, gap, okay. Straddle could be very, very good in this case. Of course, you don't know what it could be, but just before earnings from tech stocks, for example, could be a good strategy, okay? The other strategy is strangle. It's a little bit similar to straddle, but strangle involves purchasing out of the money, put and call options, so different strike prices. It aims to profit from price volatility while reducing upfront cost, okay? With straddle costs more, okay? Okay, strangle, for example, let's take Google again. before earnings. So straddle, it's the same strike price. Strangle, it's to pay less. For example, call 172. Okay, just an example here, and put, for example, the same distance, 167. Okay. In this case, it's cheaper to buy these two options, but as you can see, the price movement should be very, very important, okay, to earn from this strategy. So strangle and straddle on underlyings that make big movements. Earnings, for example, Google, as you can see, a big gap. This is great for straddle. I made a straddle just a few days ago on Google. I opened a straddle before the day before earnings, and I close the day after. So for one contract, one call, one put, I paid for each contract $1,600. Okay, so here I made a straddle here. I call and put. Okay, I paid. It's not cheap. Okay, I paid $1,600, but as you can see, there was a big gap. So my profit was about $500 for each option. Okay, I bought more than one straddle. Okay, so $500 for each straddle, it means some thousands. Okay, in just a couple of days. Of course, we don't know what could be, because it could be, for example, earnings without any gap, without any big movements, for example, like this, and it could be a loss. Okay, it's limited risk, but straddle and strangle only on underlyings that usually have big movements. For example, stocks on earnings, tech stocks, Google, Apple. So check, okay, the underlying price movement. When you see gap, okay, could be profitable for straddle and strangle. Another strategy on underlyings that they don't have this kind of movements, and come back to EWZ. Okay, for example, perfect. So as you can see, from $30 to 35, just $5. Okay, it's just the range in a few bucks. It's good for Iron Condor. Iron Condor, it's another neutral strategy, and Iron Condor combines a bear call spread and a bull put spread, allowing traders to profit from a narrow trading range. Okay, it's a very popular strategy in sideways market. There are other strategies, but I'm not here to tell you all the strategies in a sideways market. But I use bear call and bull put, so Iron Condor could be another strategy. So straddle and strangle, big movements, big underlying movements. Iron Condor, you don't want big movements. Okay, you want the underlying to stay just in few dollars. Okay, so a trading range very, very, very very small. For example, Iron Condor combines bear call, for example. Let's make 3 months. Okay. Yeah, today. Okay. For example, we sell at 35. okay, or 35, sell a call. We buy 36, I don't know, just an example, huh? Okay, and a bull put, for example, at 29, and we buy at 27, okay, here. So we collect two premiums from the bull put and the bear call, and the profit will be at the expiration date if the underlyings will be between 35 and 29 in this case. Okay, so it could be a range, but between these two prices. Okay, so here for Iron Condor, you want underline that in a sideways market, so no earnings between when you open these investments and expiration date, no earnings in between. So ETFs, for example, they are good for this strategy. They don't have earnings, and ETF, for example, EWZ, just when you see a few dollars from 30 to 34, yeah, it's okay. It's okay for this strategy. Okay. So you need to have specific criteria. Okay, it's very difficult to use so many strategies. Okay, because you need to know exactly when open an Iron Condor, a straddle, a strangle, what the volatility, risk, margin. Okay, so what works for me is becoming an expert in 1-2 strategies, not more, creating a step-by-step method, invest, having results, and then only then add other strategies. Okay, so these are just few strategies. Okay, straddle and strangle for big movements, Iron Condor for calm waters. Okay, so choose between the strategies based on your market analysis and risk tolerance. It's important, establish entry and exit criteria, because every time you need to have entry and exit criteria. So determine entry and exit points for your trades, risk management to protect your capital, entering trades using your preferred brokerage platform. Okay, I use Interactive Brokers, but you can use the one you prefer, with the position signing, risk management. So create your own method, your step-by-step method. If you want to and help a mentor who teaches you how to invest and create or improving a stream of income month after month, year after year, investing your own money, book a free consultation call with me. There is a link below this video, a calendar link. You can book now a free consultation call with me. I work only with few investors, so we can see in your specific situation if OptionFlow method could be a good fit for you. I have 2 different mentorship programs, and I work with just few selected investors because I am a businessman, I'm an investor, time is limited. Okay, so if you want to create a stream of income, book a free consultation call with me. Okay, so remember to conduct analysis, manage risk effectively, and remain adaptable to changing market conditions. Okay, we are going to face really market changing in the next future, so you need to be ready, be prepared for that, and it's very, very, very important to have a solid method, to know exactly what to do to reduce stress, reduce time, reduce energy, and to know exactly what to do. Okay, so join us in our next video, and happy trading, happy investing. Thanks for watching. Share, subscribe, like, everything. See you in the next video. Bye.